let's complete with our discussion regarding the audit report. We've seen SE 700, forming an opinion and reporting on financial statements, in which we saw the 6 plus 1, right, for forming an opinion. And then we also saw the basic elements of the auditor's report. And then 705, right, the modifications to the opinion in the independent auditor's report. What are the two reasons why an auditor may modify his opinion? One, either when there is a material misstatement, or second, when the auditor is unable to obtain the sufficient appropriate audit evidence. For these two reasons, you need to check the pervasiveness, whether it is material but not pervasive, or whether it is material and pervasive. So we call it as 1 2 1 2, right? Then 1 1 qualified opinion, 1 2 adverse opinion, 2 1 again qualified opinion, and 2 2 would lead to disclaimer of opinion. We are not in a position and we do not express an opinion. Okay. Now, the contents of the audit report which we discussed in SA 700 those were for an unmodified opinion. The contents of the audit report which we discussed in SA 700, those were for an unmodified opinion. Now we need to see what changes are to be made to the contents of the audit report in case of the qualified opinion, adverse opinion, and the disclaimer of the opinion. Do you understand that? Right, what changes are to be made to the contents of the audit report in case of the qualified opinion, the adverse opinion, and the disclaimer of the opinion. Right, so now what I will do, I will make five columns over here. One, which content of the report, then for unmodified opinion, qualified opinion, and the disclaimer of the opinion. Are you understanding? How will my audit report look like when it is a clean report? What is clean report? Unmodified. When it is qualified, when it is adverse, or when it is a disclaimer of opinion. Okay. In all case, in my report, will there be a title? Will there be a title? Yes, independent auditor's report. For unmodified also, for qualified adverse and disclaimer also, there will be a title. Right. In all cases, in my report, will there be an addressee? Right, so addressee, yes, to the members of ABC Company Limited, to the members of ABC Company Limited, members of ABC Company Limited, and you're also members of ABC Company Limited. Then what comes after the addressee? You have the opinion. Now for unmodified opinion, opinion paragraph, we will call it as opinion. But for qualified opinion, now opinion paragraph heading will change to qualified opinion. For adverse, the opinion paragraph heading will now change to adverse opinion, and disclaimer of opinion, the opinion paragraph heading will change to disclaimer of opinion. Right, then in opinion paragraph, what do we first write down? We write down the introduction. What is the introduction we write down? We have audited the accompanying financial statements. You remember the Infosys report? And we have audited the accompanying financial statements of ABC Company Limited. Do you remember that? Right, we have audited the accompanying standalone financial statements of Infosys. For unmodified, can I start my report that way, saying that we have audited? Yes. For qualified, can I say we have audited? Yes, we have audited the accompanying financial statements. For adverse, can I say we have audited? Yes, after auditing only we are saying they are not true and fair. For disclaimer, can I say we have audited? Then they say, if you did audit, why you are giving disclaimer and going? So what you will say? We have not audited. So what you will say? We have not audited the accompanying financial statements of ABC Company Limited. Then what will you say? We were unable. But no, how do you start your introductory paragraph in the opinion paragraph? Yes, we were engaged to audit the accompanying financial statements of ABC Company Limited. So we had come with the full preparation to do the audit. But what to do? You guys did not give the evidence. That is why we are giving disclaimer and we are going. So do you understand? If you know this, say in case Infosys ka report would have been a disclaimer. So now disclaimer, how would Infosys report look like? Title, addressee, and then instead of opinion paragraph, what would have been the heading over here? Disclaimer of opinion. And then what they would have written over here? We were engaged to audit. Are you understanding? What changes are to be made to the contents of the audit report is what we are discussing. We were engaged to audit the accompanying financial statements and whatever over there. Right. Then after that, we actually express the opinion. What do we say? Financial statements give a true and fair view. For unmodified. For qualified, what do we say? Financial statements give a true and fair view except for the effect of the matters described in the basis for qualified opinion paragraph. Adverse opinion, financial statements do not give a true and fair view, not true and fair, because of the matters described in the basis for adverse opinion paragraph, and we are not in a position to express an opinion, and we do not express an opinion on the financial statements. And why do you not express an opinion? Because of the matters described in the basis for adverse disclaimer of opinion paragraph, right? Basis for disclaimer of opinion paragraph, right? So this is now your opinion paragraph. After opinion paragraph, what is the next para we have? Basis for opinion paragraph. Are you all with me? Next paragraph we have is basis for opinion paragraph. For unmodified, what you will say? Basis for opinion. For qualified, what you will say? Basis for qualified opinion. For adverse, you will say basis for adverse opinion. And for disclaimer, you will say, now what will be the heading of that paragraph? Basis for disclaimer of opinion paragraph. Right, then in unmodified opinion, what will you write in the basis for opinion paragraph? SRES. You know? SRES, you know SRES, Standards on Auditing, reference to that section where responsibilities of auditor have been given, ethical requirements and sufficient appropriate audit evidence. Now, in case of qualified adverse and disclaimer, what is the first thing which now I will write in my report is the matters that give rise to the modification. Matters that give rise to the modification. Okay, what happened, auditor? Why you're issuing qualified? What happened, auditor? Why you're issuing adverse? What happened, auditor? Why you are giving disclaimer? So you say, oh, what do I tell you? Inventory is overvalued by 20 crore. Oh, what do I tell you? There are so many misstatements. Oh, what do I tell you? So much evidence they have not given me in the audit. So all your reason as to why you're modifying your opinion, first you need to give that in the basis for the modified opinion paragraph, the matter which gave rise to the modification. Are you understanding? For all three you have to write it, and the reasons for the modification. Right, then after that, now what will come in basis for qualified opinion paragraph? SRES. What is SRES? Standards on auditing, reference to responsibilities of auditor, ethical requirements, and we believe. What do you believe? That the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion. Now can I just write audit opinion? No. What will I have to say? We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our qualified opinion. For adverse, what will I say? SRES. But in the S, what change? We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our adverse opinion. And disclaimer of opinion, there is no SRES in the basis for opinion paragraph. In the basis for opinion paragraph, for disclaimer, you only give the matters which give rise to the modification. No SRES coming over there. Are you understanding, everybody, what is happening? So title, addressee, opinion, then the basis for opinion, then going concern, if any. So whenever you have a concern regarding the going concern, this para may come or it may not come. Right, next after that is key audit matter. Key audit matter, unmodified opinion, it may come, it may not come. Key audit matter in case of an unmodified opinion. What is my first column over here? It is for unmodified. Second is for qualified. Third is adverse. And fourth is disclaimer. I hope everybody knows that. Okay, so unmodified opinion, key audit matter may come, it may not come, but qualified and adverse opinion, key audit matter will always come. Qualified and adverse opinion, key audit matter will always come, because if auditor is modifying his opinion, that itself is a key audit matter. When auditor issues qualified or adverse opinion, that itself is a key audit matter, and disclaimer of opinion, key audit matter will never come. Right, so qualified adverse, it will always come. Disclaimer, it will never come. An unmodified opinion, that key audit matter paragraph may come or it may not come. Are you understanding that, everyone? You understand? So title, addressee, opinion, basis for opinion, going concern, key audit matter. Then after that, what you have? Management's responsibility. So management's responsibility, same. 134 subsection 5, all the four cases, no change. Right, then auditor's responsibility paragraph, what is that? We obtain the reasonable assurance that financial statements are free from material misstatement. And then what you have? Priya without the Y and GST. Same for qualified, same for adverse. Disclaimer of opinion, no writing Priya GST, no writing reasonable assurance. Now in disclaimer of opinion, in the auditor's responsibility paragraph, we will write down the SRES, because had we written it upstairs? Here, had I written SRES in the basis for opinion paragraph? No. So now where do I write it? I write it in the auditor's responsibility paragraph, SRES, in case of the disclaimer of opinion. So we conduct our audit in accordance with the standards. No question of making a reference to that section of the audit report where responsibilities of auditor are given, because we are in that section only, and no reference need to make any reference to that section. Then we comply with the ethical requirements, including the independence. And yeah, can I write, we believe that the audit evidence we've obtained is sufficient and appropriate to provide a basis for disclaimer of opinion? Examiner will fall off when he reads that. So what you need to write? Because of the reasons given in the basis for disclaimer of opinion paragraph, we were unable to obtain sufficient appropriate audit evidence to form a basis for our audit opinion. Right, so that's the auditor's responsibility paragraph. Then you have the other reporting responsibility, same to same for all the four. And then signature place dot also same to same, right? Signature place date also same to same. Right, are you understanding what did I discuss with you over here? Okay, what will be the changes to the contents of the audit report in case of the unmodified, how the report is, and what are the changes in case of the qualified, adverse, and the disclaimer of opinion? Starting right with the title, addressee. Then modified opinion, instead of just saying opinion, what do we now say? Qualified opinion, adverse opinion, or the disclaimer of opinion. Then instead of just saying basis for opinion, what do we say? Basis for qualified, basis for adverse, or basis for disclaimer of opinion. In that para, what is the first thing we write? The matter which gave rise to the modification. Why are you qualifying your report? Why are you modifying your opinion? That is the first thing which you write in all the three cases of the modification. Then after that, the SRES in case of qualified, adverse, unmodified, but not in case of disclaimer. Then after that, going concern may come, key audit matter, unmodified may come, qualified, adverse always come, disclaimer never come. Right, then management's responsibility, auditor's responsibility, disclaimer of opinion, auditor's responsibility. Now you write down the SES, SES, because R there is no question. And then other reporting responsibilities and signature, place, and date. Okay, so can we try a disclaimer of opinion? Just a disclaimer, can we try together? Yes, will there be title? Independent auditor's report to the members of Geo Limited, whatever is the name of the company. Disclaimer of opinion, we were engaged to audit the accompanying financial statements of Geo Limited. Right, we were engaged to audit. Then because of the reasons given in the basis for disclaimer, we are not in a position and we do not express an opinion on the financial statement. So this is my disclaimer of opinion paragraph. After disclaimer of opinion paragraph, what will be the next para now? Basis for disclaimer of opinion. What will I write down in this paragraph? The matters which give rise to the disclaimer, the matter which gave rise to the modification. Then after that, going concern, if any, this para will come. Key audit matter will never come, because it is disclaimer of opinion. Then management's responsibility, auditor's responsibility. Now in auditor's responsibility, I will write down SES. We conduct our audit in accordance with the standards. We comply with the ethical requirements. And because of the reasons given in the basis for disclaimer of opinion paragraph, we were unable to obtain the sufficient appropriate audit evidence to form a basis for our audit opinion. And then after that, you have the other reporting responsibilities, and then signature, place, and date. right? Other reporting responsibilities, and then you have the signature, place and date. Are you able to visualize? Are you able to understand what is happening over here? Right, we are discussing what changes are to be made to the contents of an audit report in case of the qualified, adverse and the disclaimer of the opinion, right? Qualified, can you tell me? Title, addressee, qualified opinion. Qualified opinion, we have audited, then true and fair except for the matters described in the basis for qualified opinion paragraph. Next para, basis for qualified opinion paragraph, matter which gave rise to the modification, then SRES, then going concern if any. Key audit matter will always come. Management's responsibility, auditor's responsibility, same like unmodified opinion, other reporting responsibilities, and then you have the signature, place and the date. Right? That is for qualified opinion, and on similar lines you also have it for the adverse opinion. Right? So 705 now, two things are important. What are the two things important? One, this 2 by 2 matrix, 1 1 1 2 2 1 and 2 2. And second thing which is important is this chart. Okay, how does my audit report look like in case of an unmodified opinion, qualified opinion, adverse opinion and the disclaimer of the opinion? Is it clear to everyone? Right, then apart from this we also have the, right, we have the SA 701 and we also have the 706. What is 701 regarding? Communicating the key audit matters in the independent auditor's report, and 706 is regarding the emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. So emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. Okay, right, say for the company there is a contingent liability litigation of 7,000 crore. Do you think it's a big amount? Right, contingent liability of 7,000 crore, and it is disclosed in the notes to account in note number 19. Is this piece of information already there in financial statements? Yes, it's there in the notes. Okay, has auditor obtained the sufficient appropriate audit evidence? Yes. Is it free from material misstatement? Yes. So can I modify my opinion for this contingent liability? No, because there are only two reasons for modification. What are two? Material misstatement or limitation on scope. I told you clearly there is no limitation on scope. I have obtained the evidence and it is free from material misstatement. So there is no reason for modification. Okay, had it been that it should have been 12,000 crore but they have written 7,000, then I could have modified. Or if I did not get the evidence, I could have modified. But right now there is no reason for my modification. But I say no, 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 I don't know such a big amount. I want to mention about it in my audit report itself. So now how I can mention about it in my audit report itself? By mentioning about in the emphasis, by mentioning about it in the emphasis of matter paragraph. What is emphasis of matter paragraph? Any matter which the auditor thinks is fundamental to the user's understanding. Right, it is fundamental to the user's understanding. Right, so that can be put in the emphasis of matter paragraph. What should be the heading of this paragraph? Emphasis of matter. Right, then what also does it say? There should be suitable cross references as to where the related information can be found in the financial statements. You should give a clear reference as to where the related information can be found in the financial statements. In my example, where it can be found? In my example, where it can be found? In the note number 19. In the note number 19. And by mentioning about this matter in my audit report in emphasis of matter, have I modified my opinion for that matter? Have I modified my opinion for that contingent liability? So without modifying, our opinion is not modified in respect of this matter. Right, our opinion is not modified in respect of this matter. Are you understanding that? Okay, now say for doing the total audit I took 400 hours. I'm just taking an example. For doing the full audit of Geo, entire team of mine, we took 400 hours. But what happened now? Out of 400 hours, 320 hours we were doing the audit of this contingent liability, and 80 hours we finished all the remaining audit over there. So every day, morning, evening, afternoon, whenever meet client, discuss only one thing. Client that litigation, client that 7,000 crore, and I have discussion with lawyer and so much of deliberation on that one matter. But finally, did you finish checking that matter? Yes. But you know, was it one of the most critical area of your audit? What is one of the most, what you say, difficult to check area in the audit? Was it one of the area where you had difficulty in applying audit procedure? It took you a lot of time to finish area audit of that particular area? Yes. So then it says, then you can put this matter in your audit report also in the key audit matter paragraph. What is key audit matter? It says key audit matters are those matters that in the auditor's professional judgment. So who is saying it is significant? Auditor. That in the auditor's professional judgment were of most significance in the audit of the financial statements of the current period. Right? Key audit matters are those matters, those in the auditor's professional judgment were of most significance in the audit of the financial statements of the current period. So you say, I am telling you, my entire audit was okay, but contingent liability, oh, don't ask. It was a terror doing the audit of their contingent liability. Are you understanding? Matters of most significance. Okay, right. So just give me a quick answer, not very relevant at intermediate level. But can it so happen that a particular matter, it comes both in key audit matter also and emphasis of matter also? Can it so happen? Okay, a particular matter, it comes both in key audit matter also and emphasis of matter also? Can it happen that it comes in any one only? Can it happen that it comes in any one only? Yes. Can it happen that it comes in both also? Yes. It is the professional judgment of the auditor. See, when a matter comes in the key audit matter paragraph in the report, what do I have to write in the report? One, why I say it was a key audit matter. Why I am saying, don't ask me contingent liability, it was such a terror. And second, now that you are saying it was a terror, how did you address it in the audit? How did you address means what are the audit procedures you perform for that matter? So nowadays audit reports are getting so interesting because now in audit report you can come to know what audit the auditor did, what audit procedure the auditor performed. Look at Infosys report. What is the first key audit matter? Revenue recognition. So does that mean their opinion is modified for revenue? No, it may or may not be, but right now it is not modified. No, because even though if you issue qualified adverse, that is the key audit matter. But here Infosys, what type of opinion is there? Clean report, unmodified opinion. But what they have written, oh, don't ask, revenue recognition, company contract with the customers, include contract with multiple products and services, company derives revenue from IT services, and it says involves significant judgment, integrated service arrangement, fixed price maintenance revenue. They said, no, very difficult. And then they said it was very difficult. Then auditor, what you did? They said we did, identification of the obligation, determining whether company is acting as principal or agent. We tested the effectiveness of control. We selected a sample of contract. We read the contract document. We identified the term. Is it interesting? Vouching verification answer. How will you verify revenue of Infosys? Now, do I come to know that by reading the report of the Infosys auditor? That auditor said revenue recognition was very difficult, and this is how we do the checking for the revenue. Then again it says the revenue recognition for the fixed price contract. If you see Reliance Industries audit report, they have 7 key audit matters in their audit report. Right? They have some 7 matters in their audit report, key audit matters over there. And then what are the principal audit procedures which have been performed by the auditor? Are you understanding that, everyone? Right? So key audit matters. What are key audit matters? Key audit matters are those matters that in the auditor's professional judgment were of most significance in the audit of the financial statements of the current period. And key audit matters are selected from the matters communicated to TCWG. So 260 is regarding matters communicated to TCWG, and out of that we select the key audit matters in SA 701. Right, what is emphasis of matter? Which is fundamental to the user's understanding. So see, when I write it in emphasis of matter paragraph, what do I write? A clear reference as to where it is found in financial statements, and opinion is not modified. But do I write in emphasis of matter why it was a key audit matter and how we perform the procedure? Do I write that in emphasis of matter paragraph? Why it was an emphasis of matter and what audit procedure we perform? No. So emphasis of matter paragraph is different. Key audit matter paragraph is different. Okay. And say auditor wanted to resign from the audit, but he could not resign. or my audit report is only for a specific set of users, and this I want to write in my audit report. Now this where I can write in my audit report, other matter, anything which is relevant to the user's understanding of the financial statements, anything which is relevant to the user's understanding. Where could that come? It will come in the other matter paragraph. What will be the heading of this paragraph? Other matter. Right? What will be the heading of this paragraph? Other matter. So anything which is most significance, then key audit matter, fundamental, then emphasis of matter, and relevant, then other matter. Do you understand what did I say? Any matter which is of most significance in the audit of the financial statements, then key audit matter. Anything which is fundamental to the user's understanding, then emphasis of matter. And anything which is relevant to the user's understanding, then it comes under the other matter paragraph. Is everybody able to understand so far? Okay, right? Key audit matter, emphasis of matter, and other matter. Do you know what is the location of key audit matter? What is the location? Opinion, then basis for opinion, then going concern, if any, because it may or may not come, then key audit matter and management's responsibility. And a key audit matter, and then after that you have the management's responsibility. So what is the location of key audit matter? After basis for opinion paragraph and before management's responsibility paragraph. However, if there is a going concern, then it will come after the going concern para. Are you understanding that? Okay. What you understand now what I say? Location of key audit matter after basis for opinion and before management's responsibility. Is it right? And if there is going concern, then it will come after going concern. Okay. Right. What about the location of emphasis of matter and other matter? What about the placement of these two paragraphs in the report? Right? Emphasis of matter and other matter. What about the placement? What does the standard say? As deemed appropriate. They don't have any fixed location. They can go and sit anywhere. As deemed appropriate. That is what is told by SA 706. That much professional judgment you should apply. You understand? No. That much professional judgment you should apply. But it says as deemed appropriate, right? As deemed appropriate. So why you will put it in the first? Is it that relevant to the user's understanding? Is it that it has to come? Is it more important than the opinion and basis for opinion? So that's what you're not deeming it appropriately. When you're saying it, you're putting it in the beginning. That means your professional judgment is not right. You're getting your bread and butter for giving the opinion. You're not getting your bread and butter from the company for writing that few of the branches are audited by another auditor. But that's what, even though if the standard doesn't restrict, there are some rules and norms which you need to apply on your own. Na? You can't go, you see, then you put title, addressee, opinion, basis for opinion, going concern, if any. Still, then it is sure. Then after that, you can first write key audit matter, then emphasis of matter, then other matter. Or you can first write emphasis of matter, then key audit matter, then other matter. Sometimes you can write emphasis of matter, key audit matter, then management's responsibility, auditor's responsibility, other reporting responsibilities, then other matter, and then signature place date. Yeah, any of these is fine. You read the audit report of company, you'll see this. Right? So you're only they roam around. They can't roam at opinion and opinion. That is a very, what is theoretical application of concept that you do. As deemed appropriate, so ma'am, I'll start my report only with other matter. And nobody will appoint you ever as an auditor of any company. They say not done audit class, and doing audit class understood something wrongly. You understand the point over there? Right? So as deemed appropriate, take it in the right spirit. You understand? Okay, right. So what do we say over there? And generally this is how it is seen. They sandwich the key audit matter. Whenever there is a emphasis of matter, other matter, they put that. And then after that you have same. Management's responsibility, auditor's responsibility, other reporting responsibilities, and signature place date. And opinion, it could either be clean or it could be modified, and basis could again will become the basis for modified opinion paragraph. So do you understand the total contents of the audit report now? Do you understand the total contents of audit report now? Title, addressee, opinion, basis for opinion, or it could be modified opinion and basis for modified opinion. Then going concern, if any, then emphasis of matter, key audit matter, other matter, though these may keep moving little bit here and there, right? Then management's responsibility, auditor's responsibility, other reporting responsibility, signature, place and date, right? Signature, place and date. Clear to everyone? Entering, no, or overhead? No, entering, understanding, no. Right, okay, right. What are the other requirements of SA 706 over there? What are the questions like over there? One, what is the feature of the emphasis of matter paragraph, which I've already discussed with you. And then examples of emphasis of matter, right? So what are the examples? The example which I just gave you, contingent liability of 7,000 crore, uncertainty related to future outcome of an exceptional litigation, then significant subsequent events which occurred between date of financial statements and the date of audit report. So that is SA 560. Then early application of a new accounting standard, standard applicable from 2027. Company voluntarily started complying from 2026 only. Early application of a new accounting standard. Major catastrophe. What is catastrophe? Fire, flood, earthquake. Company suffered a loss of 800 crore, right, which has a significant effect on financial position, right? AFRF is unacceptable but required by law regulations, say US GAAP, German GAAP, and AFRF unacceptable. It's not acceptable, but you're doing the audit. Why? Because it is required as per the law regulation. Then what report will you give? True and fair? No. Then you will give a report saying prepared. It is prepared as per German GAAP or so, right? Financial statements are prepared as per a special purpose framework. Facts which become known to the auditor after date of audit report, 560. And a managerial remuneration, then relating to accrual of a contractually receivable claim, and frauds which have dealt with within the financial statements of the company. What are these? Examples of emphasis of matter. And then you have other matter, and then again the examples of other matter. Right, yes, just as on YouTube you have the trending videos, right? Similarly over here we have some things like ATF R raised to 10, and we have some things which we called as the trending. So right now what is trending in the ICI exams is 701, that is communicating the key audit matter. So what is the first question we discuss over there? Okay, what is the meaning of a key audit matter? What is meaning? Key audit matters are those matters that in the auditor's professional judgment were of most significance. Next one, the purpose of communicating key audit matter. Right. Again, regarding key audit matter, look at the number of the, what do you say, the correct and incorrect coming in the exam. And regarding key audit matter, right? I'll cover these correct and incorrect also over there, right? When we discuss key audit matter. And in the theory part, what is the question coming regarding the key audit matter? Right, and in the theory part, what question is coming regarding key audit matter? Purpose of communicating key audit matter, then scope of this essay, right? Then determining key audit matters. Right, again in one exam, what did they ask? The definition of pervasive. Did we today cover the definition of pervasive? Yes. So now coming to essay 701, key audit matter. What is the first point over there? The meaning of key audit matter. Now coming to the purpose of communicating key audit matter. So today when we right now saw the Infosys report, by reading Infosys report, what did I also see in that report in key audit matter? Okay, revenue recognition is a key audit matter, and what audit procedures were performed by the auditor. By reading this information in the audit report, does it increase the value of the audit report? Do I get more information, better understanding of the company now? Right, so one, it enhances the communicative value of the audit report. It increases the communicative value of the audit report. Then second, can I now see, I am a user of the audit report. I am a user of financial statements. And who has issued this report? Auditor of the company. Now, am I in a better position to understand, okay, auditor, when you did audit, now I realize how much trouble you went through while checking revenue recognition? So now assist the intended users in understanding those matters that in the auditor's professional judgment were of most significance. So now can the users empathize to the auditor? Yeah, auditor, how much effort you put for checking and a revenue. So assist the intended users in understanding those matters that in the auditor's professional judgment were of most significance. And now, by reading about this in the audit report in the key audit matter, do I understand Infosys in a more better manner? Okay, there is some revenue, they have some fixed price contract, and then there are agreement relating to same. There are some integrated agreement and all. So it also assists in understanding the entity and areas of significant management judgment. So what does it help? It enhance, it assists, it assists. What does it enhance? It enhance the communicative value. What does it assist? It assists in understanding those matters that in the auditor's professional judgment were of most significance, and it also assists in understanding the entity and the areas of the significant management judgment. Are you understanding that? Yes, everyone? Then, key audit matter is not. This is the favorite one where the correct and incorrect are coming in the exam. And a key audit matter is not. Scope of this essay. That means what is not a key audit matter? And what is not a key audit matter? So auditor came to know, okay, earlier to three standards were only there. 700, 705, 706. Now this new one has come, 701. Okay, so auditor came to know, okay, now there is a new audit report, paragraph in audit report called as 701, called as key audit matter. So then what he said, oh, something new. So what? No, management, now they should have given disclosures as per schedule 3. But management have not given the disclosures as per the AFRF. I tell management, no tension management. You have not given schedule 3 disclosures in financial statement, no problem. I have a new para with me. I will write it in that para. Is it a substitute for disclosures in accordance with the AFRF? Is it a substitute? Okay, management is not giving disclosure, so auditor, you put it in your audit report and key audit matter. No, it is not a substitute for disclosures in accordance with the AFRF. Say there is a material uncertainty related to going concern. Where you should mention about this material uncertainty? There is a dedicated para for that now, called as the when a material uncertainty related to going concern para. Again, auditor says, no problem, I have one para in my report, I will put it in that para, key audit matter. No. Auditor wanted to modify his opinion. He says, now why modify? Instead of modifying, I'll put it in the key audit matter. No, you cannot put it in the key audit matter paragraph. It is not a substitute for disclosures required in accordance with the AFRF. It's not a substitute for a material uncertainty related to going concern. It's not a substitute for the modified opinion, and it is not a separate opinion on individual matter. If they've mentioned about that revenue recognition over here, does that mean that they've given a separate opinion on revenue recognition? Does it mean that the Infosys auditor have given a separate opinion on revenue recognition? No, it is not a separate opinion on the individual matters, right? So what does it say? Key audit matter in the audit report is NOT. It is not a substitute for disclosures as per AFRF. It is not a substitute for auditor expressing a modified opinion. It is not a substitute for a material uncertainty relating to events or conditions that may cast a significant doubt, and it is not a separate opinion on individual matters. Before all the points, what is the common word over there? Not. And it starts with not. Are you noticing that over here? It starts with the not. Okay, right. So if you see few of the correct and incorrect which we were seeing over there, right, regarding key audit matter. Yes, what were the correct and incorrect they were asking? Key audit matter is not a substitute for disclosures in financial statements. Correct. It is not a substitute for the disclosures required as per AFRF. Key audit matter is a substitute for expressing a modified opinion. No, it is not a substitute for auditor expressing a modified opinion. Then key audit matter in the audit report is a substitute for material uncertainty related to events or condition. What did we say? It is not a substitute for material uncertainty related to events or condition. Is everybody able to follow? Key audit matter is not a substitute for what? Disclosures in accordance with AFRF, modification to the opinion, material uncertainty related to going concern, or a separate opinion on the individual matters. Okay, then how to determine whether a particular matter is a key audit matter? Right, I'm doing audit, hundreds of matters keep on coming out. Out of that, how do I identify, okay, this is key audit matter? How to identify what it is? Key audit matter. What is key audit matters? Matters which are of most significant. So now most significance, that means significant, right? So areas of higher assessed RMM or the significant risk. And significant auditor judgment relating to areas that involve significant management judgment and the effect on the audit of any significant event or transaction that took place during the period, right? So what does it say? One, areas of higher assessed RMM. That means you're saying that the risk of fraud and error is very high or it's a significant risk. Then second, what you're saying, significant auditor judgment. What did I tell you? Out of 400 hours, for 320 hours, I was checking their contingent liability only. So significant auditor judgment and relating to events or transaction that occurred during the period. That means what? Let's say generally how we check share capital. Generally how we check share capital? Generally share capital, there is no change as compared to previous year, so we just check it from the financial statements of the previous year, and generally there is no change in share capital. But say this year company came up with an IPO like Zomato or say Nika or any of them, say they came up with an IPO in any of the previous year, so that year auditor would have to put lot of effort in checking share capital. The year when the company comes up with an IPO, lot of effort in checking of share capital. Otherwise, normally, not much of checking in share capital. So what is that? The effect on the audit of any significant event or transaction that occurred during the period. That this year the company got amalgamated with another company. Now every year Tata does not acquire Air India, but this, in recent past, did they acquire Air India? Right, so that particular audit, will the auditor have to put more effort for checking that area? Right, so that's a significant event or transaction that occurred during the period. Are you understanding that? How to determine that a matter is a key audit matter? You say if it is a higher assessed RMM or a significant risk, then significant auditor judgment and effect on the audit of any significant event or transaction that took place during the period. Right, some answers over there I make you write W. W means writing practice. You have to do the writing practice for this particular answer. And writing means writing an answer, not making notes. Making notes is different from writing an answer. Right, so you write down as if you're writing the answer in the exam. The question has come, determining key audit matter, and then you're writing an answer for that one. Right, so determining key audit matter. Okay, right, then after that, key audit matter is not a substitute. How do you give a key audit matter? Why and how it is a key audit matter, right? Why it is a key audit matter and how it has been addressed in the audit. Right, there could be situations wherein you know this is a key audit matter, but still you're keeping quiet. See, one, what was question number three we studied, what is not a key audit matter. Now what you know, revenue recognition is a key audit matter, but till you say, don't say anyone, don't tell it to anyone. Though it is a key audit matter, still you are not reporting. So circumstances when key audit matters are not to be communicated. One, when law regulation precludes disclosure, because law regulation always override. So if law says not to give a disclosure, we will not report it as a key audit matter. Or second, the adverse consequences of doing so will outweigh the public interest benefits of such communication. What does that mean? The adverse consequences of doing so will outweigh the public interest benefits of such communication. Simple. It means it will do more harm than good. Adverse consequences of doing so will outweigh the public interest benefits of such communication means what? It will do more harm than good. Then what does it say? Even though if you know it's a key audit matter, keep quiet, don't put it in your report as a key audit matter. Right? Clear to everyone? SA 701. What is 701? Communicating key audit matters in the independent auditor's report. What is the definition of key audit matter? Key audit matters are those matters that in the auditor's professional judgment were of most significance in the audit of the financial statements of the current period, and key audit matters are selected from the matters communicated to TCWG. What is the purpose of communicating key audit matter? Right, one, it enhances the communicative value of the audit report. Then second, it assists the intended users in understanding those matters that in the auditor's professional judgment were of most significance, and it assists the intended users in understanding the entity and areas of significant management judgment. What is not a key audit matter? What is not a key audit matter? Key audit matter is not a substitute for disclosures in accordance with AFRF. It is not a substitute for material uncertainty related to going concern. It's not a substitute for a modification of opinion. It is not a separate opinion on the individual matters. How do you determine that a particular matter is a key audit matter? Areas of higher assessed significant areas of higher assessed RMM or significant risk, or what does it say? Significant auditor judgment has been involved, including evaluating of the management judgment. And third is effect on the audit of any significant event or transaction which took place during the period. Like I told you, IPO came during the period or amalgamation happened during the period. And then when key audit matters are not to be communicated, you know it's a key audit matter but still quiet. Why quiet? Because law regulation precludes disclosure, or the adverse consequences of doing so will outweigh the public interest benefits of such communication. Are you able to follow what I'm saying over here? Right? Key audit matter when not to be communicated, law regulation precludes disclosure, or the adverse consequences of doing so will outweigh the public interest benefits of such communication. Okay, right? So that is regarding the key audit matters and the entire audit report series over there, right? What are the standards in the audit report series? SA 700, forming an opinion and reporting on financial statements. 701, communicating key audit matters in the independent auditor's report. 705, modifications to the opinion in the independent auditor's report. And then 706, which is emphasis of matter paragraph and the other matter paragraph in the independent auditor's report, right? Emphasis of matter and the other matter paragraph in the independent auditor's report. Okay, right? So now let's come to another discussion, right? So we've discussed all these: forming an opinion, then auditor's opinion, basis for opinion, management's responsibility, right? Then after that 701, right? So lot of questions over there, right? So you can always study. I'm just giving you an overview of the discussion over here. Okay, right? So now let's come to say another right, as we've studied SA 200, let us look into the other parts of SA 200. What are the other requirements of SA 200? Whenever auditor you want to achieve your overall objectives, right? What are the other objectives of the auditor? What are the other requirements of SA 200? So we've seen overall objectives, we've seen the AFRF. Now we've also seen the term reasonable assurance. It is a high level of assurance, right? It is a high level of assurance but not an absolute assurance, right? Now we talk about the ethical requirements, that CA, whenever you have to as express an opinion, whenever you want to achieve the overall objective, you need to comply with certain ethical requirements including independence. You need to comply with certain ethical requirements including independence. What are those ethical requirements over there? Those being integrity, right? Integrity. Then you have the objectivity. Then PCDC. What is PCDC? The professional competence and the due care, right? Professional competence and the due care, right? Then confidentiality, right? Confidentiality, right? Not to disclose the secrets of the client unless required by law or taken the prior consent. And then you have the professional behavior, to avoid any behavior which might bring the discredit to the profession. What are these? Either you call them ethical requirements or you can also call them as the fundamental principles to be followed by a professional accountant. What are those? Integrity, objectivity, professional competence and due care, confidentiality, and the professional behavior, right? Ethical requirements. What are those? Right? The integrity, objectivity, professional competence and due care, confidentiality, and the professional behavior, right? Integrity, what does it say? Straightforward and honest. It implies the fair dealing and the truthfulness. It effectively means that a CA will not associate with reports, return, communication, or other information which he believes contains a materially false or a misleading statement, or contains information which is provided recklessly or omits required information where such omission could be misleading. Based on that, did they make that MCQ over there in the exam? Right, based on that, had they prepared this MCQ in the exam that the CA has given the report for the false in yes, CA signs a false report knowingly. And so signing a false report knowingly, what did we say? Which of the following fundamental principle of ethics has been violated? We said the integrity. Right, so what knowingly? It effectively means that he will not associate with returns, reports and certificates which he knows, believes contains a materially false or a misleading statement. Right, so that's integrity. Then objectivity, the principle of objectivity requires that not to compromise his professional judgment because of the bias, conflict of the interest or undue influence of the others. Right, so no bias, no conflict of interest, no subjectivity, right, only the objectivity while expressing the opinion. Then PCDC, what is PCDC? Professional competence and due care. He attains and he maintains. So when you study for the CA course, you attain the knowledge, but after you become a CEO also, you have to maintain the knowledge. You cannot say, ma'am, when I wrote exam, it was Caro 16, so I don't know anything about Caro 20. You know, when I had written my exams, that time it was AAS, Auditing and Assurance Standard. Now what ICA has issued the standards on auditing. Right, later on they revised it to the standards on auditing. So obviously you have to attain and maintain the professional knowledge and skill at the level required to render the competent professional service based on current technical and professional standards. So not what was there once upon a time, right? Current technical and professional standards, and also to act diligently. Diligently means to act with due care, right? So again, what does it say? To act thoroughly, rest carefully, thoroughly and on a timely basis, right? So that's the principle of the PCDC. What is PCDC? Professional competence and the due care. Then confidentiality. What does it say? To respect the confidentiality of information acquired as a result of the professional or business relationship. To respect the confidentiality of the information. And professional behavior. To avoid any conduct that he knows or should know might bring discredit to the profession. So avoid any behavior which might bring the discredit to the profession. What could bring discredit to the profession? Like, you know, chartered accountant. He thinks, oh, I am a chartered accountant, I can do anything. And what he did, his relative had written a will and he made the unauthorized changes in the will of the relative. And everything what was in the uncle name, the CA made it in his own name. Now, this CA did it in his personal life, but still, is it bringing discredit to the profession? He should know that these type of activities, they bring the disrepute to the profession, right? So, not bringing any discredit to the profession. During lockdown, CA opened office. Again, it says, you're bringing discredit to the profession. You're not following the government guidelines. Right, bringing discredit to the profession. Okay, right, so these are the fundamental principles. What are the fundamental principles? Integrity, objectivity, professional competence and due care, confidentiality and the professional behavior. And very important discussion over there is regarding the independence. What does it say? A chartered, you know, what was the title of our audit report? What was the title of our audit report? Independent auditor's report. So very important for the auditor to maintain the independence. What do you mean by independence? That the judgment of a person is not subordinate to the wishes or directions of another person, and it should not be subordinate to the wishes or directions of the another person. And what does the code of ethics require? Not only the independence of the mind, but also the independence in the appearance. Right, so you say, ma'am, I am independent. So that is as per your mind. Okay, you are saying, ma'am, I am independent. My integrity, my objectivity, and my professional skepticism has not been compromised. Who is telling this? You are telling this. According to you, you are independent. But if I ask your friend, oh, this fellow is telling he is independent, do you also think that he is independent? He says, ma'am, what he is telling independent, he is not at all independent. He is having a business with the client. So if you are having a business with the client, then obviously you are having a financial interest in the client. Financial interest with the client, that's a type of a self-interest threat which you have over there. So in that case, are you independent? No, you are not independent in the appearance. So you have to avoid any such facts and circumstances because of which a third party may think that the integrity, the objectivity or the professional competence of the CA has been compromised, right? So again, independence is again a very favorite area for question by ICAI, right? So independence of the auditor, we mark it as an ATF. Right? So independence means that the judgment of a person is not a subordinate. And what type of independence is required? Independence of mind and independence in appearance. Right. So, I ask you, hey, are you studying every day? This is the best example I can give for independence. I ask you, are you studying? You say, yeah, ma'am, I'm studying so much. Every day I study. I'm preparing notes, ma'am. I'm revising. I'm seeing videos and all. So, as per your mind, as per your state of mind, are you studying? As per your state of mind, do you think that you are studying? Yeah. Then I say, can you call your parents? I just want to ask, say, who said? Who is studying? They said, is studying? Roaming around the whole house. So in that case, is there study in appearance? Only you think you are studying. Nobody else thinks you are studying. You understand that? No. So your auditor says, no, no, I'm very independent. And his mind only is independent. Other people, do they think the same about him? No, they don't think the same about it. And what does it say? We want both independence of mind and independence in the appearance. So what is independence of mind? State of mind. And what is independence in appearance? The avoidance of facts and circumstances without being affected by the influences, allowing an individual to act with integrity, objectivity, and professional skepticism. Again, the avoidance of facts and circumstances that are so significant that the third party and the third people, other people are saying, could reasonably conclude that auditors' integrity, objectivity, and professional skepticism had been compromised. So, are you understanding independence of mind and the independence in the appearance? Clear to everyone? Now, whenever I talk about the word independence, the next word coming to your mind, whenever we talk about the term independence, the next word coming to your mind has to be to check whether there are any threats to the independence of the auditor, whether there are any threats to the any danger to the independence of the auditor. One classic example of threats could be all the all the disqualifications given under section 141 subsection 3 of the Companies Act are classic examples of threats to the independence of the auditor. 141 subsection 3. Because what does 141 subsection 3 say? Right? How many, yes, 141 subsection 3. How many disqualifications of company auditor? 9 disqualifications. A, B, C, D, E, F, G, H, I. What is A? Body corporate, 141(3)(a). What is that? Body corporate other than LLP. Right? Who a person shall not be eligible for appointment as an auditor if it is a body corporate other than LLP. What is 141(3)(b)? Officer or employee of the company. So if I am an employee of Geo Limited, can I do the audit of Geo? No. Why? Because it's a threat to the independence of the auditor. Maker checker has to be different. If I am an employee of the company, can I do the audit of that company? No. So I am an employee of Geo. Can I do the audit of Geo? No. So I tell my partners, my employee, you do audit of Geo. What does 141(3) say? A person who is a partner or who is in the employment of an officer or employee of the company, even they cannot be appointed as an auditor. So I cannot do the audit of Geo because I am officer employee. My partner, my employee, even they cannot do the audit. Right? Because indirectly it is under my influence only they do the audit. Then what is 141(3)(d)? Person, partner, relative. Person, CA himself or his partners or his relative. What is 141(3)(d)(1)? Holds any security of or interest in. Right? 5 companies. Which are the 5 companies? Company, holding company, subsidiary company, associate company, or any other subsidiary of that holding company. What does that mean? If I want to do the audit of Geo, I cannot hold the share of Geo, I cannot hold the share of the holding of Geo, subsidiary company of Geo, associate company of Geo, or any other subsidiary of that holding company. If I have to do the audit of example Geo, I should not hold a share of Geo, holding company of Jio, any subsidiary of Jio, any associate of Jio, or any other subsidiary of that holding company. Five company. Which are the five company? Company, holding company, subsidiary company, associate company, and any other subsidiaries of that holding company. Right? So what does it say? Person holding any security of or interest in five companies. However, what is the exception? Relative can hold the security up to the face value of rupees 1 lakh in the company. And if relative exceeds the limit, then grace period for taking corrective action is 60 days. Right, 60 days. Right, then what is 141 3D2 is indebtedness exceeding rupees 5 lakh up to rupees 5 lakh allowed. 141 3D3 guarantee exceeding rupees 1 lakh up to rupees 1 lakh guarantee allowed. Right, so 141 3D, that is the security interest, indebtedness, or the guarantee. Then 141 3E, what is 141 3E? A person or a firm is having any business relationship. Right, however, two business relationships are allowed. What are the two which are allowed? One, it says commercial transactions for rendering the professional services. So if I'm the stat auditor of Jio Limited, can I also do their tax audit? I'm statutory auditor of Jio. Can I do their tax audit? Yes, it is allowed. Professional services as given under the Chartered Accountants Act. Or what does it say? Commercial transactions as a customer in the ordinary course of the business, and that too at the arm's length price. Otherwise, when Companies Act 2013 ka draft had come, that why this point was not there, exception was not there. So auditors started, worrying, okay, tomorrow if I have to do the audit of DTDC, I cannot send a courier by DTDC. Why I cannot send? Because it will be business relationship. He's saying tomorrow if I want to do the audit of Marriott Hotel, I cannot go and eat food over there. Why? Because it will be a business relationship. If tomorrow I want to do the audit of Apollo Hospital, I cannot go for a medical checkup over there because it will be business relationship. Auditor says you are making my survival difficult. So then Companies Act got an exception over there. What did they say? Commercial transactions only as a customer, that too in the ordinary course of business at the arm's length price. Is that allowed? Yes, that would be allowed. Right? That would be allowed. Then what does it say? Relative is a director or is in the employment as a director or a key managerial personnel of the company. Right, relative is the director or is in the employment as a director or a key managerial personnel of the company. Right, then if I want to do the audit of Jio. My brother is a director in Jio. Can I do the audit of Jio? No. If I am a director in Jio, can I do the audit? No. I am disqualified under 141(3)(b). If my brother is a director, then I'll be disqualified under 141(3)(f). Are you getting that point? Right. Then what is 141(3)(g)? Again, a favorite one of ICAI. CA is in full-time employment elsewhere or already holding the audits of 20 companies. However, while counting these limit of 20 companies, which are the audits which are not to be counted? One person company, small company, dormant company. These three, they always roam together. These three companies, they always roam together. Which three? One person company, small company, and the dormant company. One person company, small company, dormant company, and the private companies having the paid up share capital of less than 100 crore. Right, private companies having paid up share capital of less than 100 crore, provided there is no default in the filing of the financial statements and the annual return with the registrar. Okay, right, so say ABC, a partnership firm, C is in full-time employment elsewhere. Right, so now total audits which can be taken in the name of the firm, 40. Say right now they are already doing the audit of 36 public companies. So public companies are to be counted. And now they are proposed to be appointed as an auditor of 5 one-person company, 5 dormant companies, 5 small companies, and also 6 private companies having paid up share capital of 90 crore each. Can they accept all these appointments? Right? Can they accept all these appointments? Yes. In the same question, I make one change. 6 private companies, each having a paid up share capital of 120 crore. Now, can they accept all these appointments? No. First three, they can accept. But now, out of these 6 private companies, they will have to select any 4 private companies. Why? Because only 4 stock is available. Because 40 audits, 36 already there. Maximum 4 audits they can accept. Are you getting that? Okay, right? So 20 audits per person. Right now, say there are 18 audits in the name of A, and say 17 audits in the name of A, and 19 in the name of B. And 17 audits in the name of A and 19 audits in the name of B. So how many more audits can be taken in the name of A? 3. And how many audits in the name of B? 1. So total audits which can be taken in the name of the firm, more 4, right? So total 40. Right? So audits in their individual name and audits in the name of the total audits which can be taken in the name of the firm. Right? So what is that? 141.3G. What is 141.3G? CA is in full-time employment elsewhere or already holding the audit of more than 20 companies. Then person convicted by a court for an offense involving fraud and a period of 10 years has not elapsed from the date of such conviction. So once a person has done a fraud, next 10 years no company audit for that person. Right? Next 10 years no company audit for that person. And then what is 141.3I? What is 141.3I? The person, whether directly or indirectly, has rendered the section 144 services. To whom I cannot render 144 services? Only 3: company, holding company, and subsidiary company. Here you don't have associate company or any other subsidiary of that holding company. Right? So section 144 services. What is section 144? Auditor not to render certain services. What does it say? Any other services to be rendered by the auditor of the company, they should be approved by the audit committee or the board of directors, as the case may be. Because every company is not required to constitute an audit committee. We have the applicability of section 177. So as per 177, if the company is required to constitute an audit committee, then audit committee. If they are not required to have an audit committee, then the board of directors. Are you understanding? But in this list of other services, the following services can never be there. What are those services? Blacklist of 144. Everybody, are you with me? If I am the statutory auditor of the company, I cannot provide the following 9 services to 3 companies: company, holding company, and the subsidiary company. Which are those services? Accounting and bookkeeping, internal audit. Accounting and bookkeeping, internal audit. Then design and implementation of financial information system, outsourced financial services. Investment advisory services, investment banking services, actuarial services, management services, and any other kind of service as may be prescribed. Right? Section 144, auditor not to render certain services. Other services to be rendered, they have to be approved by audit committee or the board of directors. So if I'm statutory auditor, if I have to do the tax audit, who has to approve that? Audit committee, board of directors. And is tax audit there in the blacklist? No. So then can I do tax audit? Yes. But if it's in the blacklist, accounting and bookkeeping, then can I do it if it is approved by audit committee, board also? No. So if it's in the blacklist, then even though if it's approved by audit committee, board, can that service be provided? No. What are those services? Accounting and bookkeeping, internal audit, design and implementation of the financial information system, outsourced financial services, then investment advisory services, investment managers, management banking services, management services, actuarial services, and any other kind of services as may be prescribed. Are you getting that? Right. And then tell me section 177. Audit committee. Which companies are required to constitute an audit committee? Obviously, whenever a list of applicability is prepared, who comes first? Listed company. And wherever a list of non-applicability is being prepared, who comes first? Non-applicability, then one person company, small company, and the dormant company. Generally, I am telling you, don't say listed and unlisted. Think before you speak. You understand what am I saying over here? Okay, whenever a list of applicability is being prepared, then generally who comes first in the list? Listed company. And wherever a list of not applicable is being prepared, who will come first generally over there? One person company, small company, and the dormant company. Right. So yes, which companies are required to constitute an audit committee? Listed company always. Apart from listed company, it says every public company having the paid up share capital of more than or equal to 1000, 10, 100, tell everything. Oh, ho, ho, 138 you're bringing here. Huh? Paid up share capital of more than or equal to 10 crore or having the turnover of more than or equal to 150 where you found 100 crore. My God, they are auction, huh? They are doing. Okay. Or in the aggregate LBDD, loan borrowing debenture deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of director. So it gets shuffled, now. So many applicability, they just get shuffled all together over there, right? So every public company having the paid up share capital of more than or equal to 10 crore or having the turnover of more than or equal to 100 crore or having the LBDD. What is LBDD? Loans, borrowing, debenture deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of directors. Okay, right? The audit committee of the board of directors, right? So XYZ Limited is engaged in the business of shoes having geographical presence across India. Following details are available from the last audited financial statements for financial year 2021. Paid up capital 9.8 crore, turnover 98 crore, outstanding loan from bank 25 crore, list of liability of outstanding debenture 26 crore. Comment on the applicability of the constitution of audit committee for XYZ Limited for 21-22 based on the above information. They have to constitute. Yes, paid up share capital of more than or equal to 10 crore? No. Turnover more than or equal to 100 crore? No. But what does it say? Loans, borrowing, debenture deposit. What did I just tell you? LBDD. Loans, borrowing, debenture deposit of more than or equal to 50 crore and 51 crore. So are they required to constitute an audit committee over there? Yes. So now start writing down an answer. Let me see how you write the answer. I'll show the question to you. Right, because we can discuss so many questions, but what is more important is how you write down the answer. Right, so now you said your answer is absolutely right, but now that you have to write it for 4 marks in the exam. So everybody, yes, if you've not opened your notebook so far, open your notebook, take out the pen and start writing. Right, as if you're writing an answer in the exam, minimum 1-page answer I want in all the books. Right, start writing. Applicability of section 177. As per section 177 of the Companies Act 2013, right, listed companies and the following classes of companies are required to constitute an audit committee. And then write down every public company having. Yes, I'll move the question up here. Yeah. Yes, all of you start writing. That's the magic. That's the secret of success in audit paper when you start doing the writing practice. Right, start writing. Yes, all of you, please write down. First, you need to write down the provisions, then say in the given case, and therefore the company is required to constitute an audit committee. No, in exam you're going to write like that, PSC of more than or equal to 10 crore, TO of more than or equal to 100 crore. What I told you, as if you're writing in the exam, where say, that type I want you to write down the answer. even if this much realization you get in the class, now knowing a concept, understanding a concept, and writing an answer are two different things. The overall objective of the batch is achieved. Very good. Write down. When you write assurance and auditing and assurance, when you start writing, then you have an assurance that you'll get good marks. Why you wrote government company? From where you got? Government company, where you got it from? No, government companies don't need to make audit committee. Nice handwriting, content should also be nice. Sometimes handwriting also bad, content also bad. What is important to be good, handwriting or content? Both. But handwriting, do you have hope? I don't think. If nothing happened in last 20 years or 18 years, now what will happen to handwriting? Handwriting is okay. If content is good, you get good marks in the exam. Only presentation should be good. And a beautiful, what you say, bad handwriting, still you have to present it in a good manner. So if you already have good handwriting, then no problem. But I'm talking for those whose like handwriting is like so. So that's okay. Work on the content and presentation. That's very important. See, you need to get the flow of how to write down the points. Loans and borrowings. No, we said na because question mein debenture hai, so you have to write debenture. No, loan LBDD, loans, borrowing, debenture, deposit. Otherwise your answer won't be justified. No. And a loan, borrowing, debenture, deposit of more than or equal to 50 crore. What is the name of the company? XYZ. Where you writing as private limited? That is the next question. I started wondering. I started wondering all of a sudden why it became private company. No, don't see that. See upset, up. Half of the question is on the previous page. You had already given the answer, no? That company needs to constitute audit committee. Change the mind. No. But we discussed the answer in the class. No issues. Next question is for rotation of company auditor. As private limited has a paid up share capital, that question is regarding the rotation. Silly mistake, no? This is called silly mistake. Yeah, you finished writing? Then what you are doing? Only facts of the case you've written so far. Write conclusion. So now what? Okay, the company XYZ is required to constitute an audit committee as the aggregate is debentures is exceeds 50 crore. Okay. Generally, you should give that to the examiner in the last line in the answer. No. So that aggregate borrowings and debentures of the company are exceeding 50 crore and hence the company is required to constitute an audit committee. It should come like towards the verdict of the answer, no, rather than coming as in somewhere in between over there. Right? Now little better. Not really. Now what? Paid up share capital. Now you'll draw that more than or equal to sign in exam or what? No, no, you'll write down. Is more than, equal to or more than. It's preferred not to write this way in the exam. This is like making notes. We are not making notes. We are writing an answer in the exam. But it is descriptive pattern in which is to be written over there. Like, and again 100 crore during the preceding year. Again, that details have to be given. These look like bullet points over there. What I mean to say, like, the more descriptive, the more better, you write the content, give good volume to your answer, the better marks you could get in the exams. Okay. Right? So are you writing? Or is it like different thing, to discuss a concept, to know an answer and to write an answer over there? Yeah. And then, sometimes, in spite of all this, it is still a challenge, to write an answers or so. So my very genuine advice, it's just that I'm just for the sake of saying it, I'm telling you, my very genuine advice for those who have identified that writing is a problem for them, I'll just tell you about it. Right, so applicability of the constitution, it says according to section 177, in addition to listed companies, the following classes of companies shall constitute an audit committee: all public companies having paid up capital of 10 crore or more, all public companies having turnover of 100 crore rupee or more, and all public companies having in the aggregate LBDD, loans, borrowing, debenture, deposit exceeding 50 crore or more, and paid up share capital and all are to be taken on the basis of the last date of the audited financial statements of the previous year. Okay. Therefore, provisions of constitution of audit committee are applicable only to listed companies and public companies satisfying criteria as stated above. In the given case, what has happened? XYZ engaged in the business of shoes is a public company having paid up of 9.8 and turnover of 98, which is less than the prescribed limit of 10 crore and 100 crore. However, aggregate of its borrowings, outstanding loan from bank and liability of outstanding debenture is exceeding the prescribed limit, that is 50 crore rupees. Therefore, provisions relating to constitution of audit committee will be applicable. That's what I wanted to tell you. Okay, it should come towards the end of the answer. Okay. So I was telling you, those of you who are genuinely concerned, this is regarding their writing quality or quality of answers they write. This is my genuine advice to all of you. I think that there are three ways in which you can improve your writing. First way, okay, initial days, you absolutely are clueless regarding what's a good answer like. So what to do? This textbook is in front of you, or suggested, or RTP is in front of you. Your notebook is in front of you. From the textbook, simply copyright the answer in the notebook. Copyright. Copy down the answer, different varieties of answer, just a few, and randomly pick up a few variety and write down. Now you're CA student, how many days you'll copyright? After few days of copywriting, you will only feel, carry what I'm copywriting, I'm CA student. No. But then of that call, that will you realize after 10-15 answers you write, or you think, audit program I've never written any answer, audit report I've never written any answer, so copyright. Then after that, what you do, you read the question, you read the answer also. You read the answer 10 time, 50 time, 100 time. You want to learn the answer also. So you read the question, you read the answer also. How many ever times you want to read it, then close the textbook, keep it aside, and then start writing on your own. First step, copyright. First, few answers. Then after that, read the question, read the answer, then keep the question aside, and then then keep the answer aside, and then you start writing the answer on your own. Third step, now this is more confident step, only read the question and start writing the answer on your own. Don't bother to see what is the actual answer over there. Like that, now what I did with you, just showed you the question and told you to start writing the answer, and then after you've written the answer, open the textbook and see what answer I should have written and try to reconcile, okay, what I have written and what I should have written. You follow? Can you able to visualize what I say? What first thing you will do? Few answers you will copyright. Okay, what is there in the textbook, that those answers you copy from the suggested. Then for few answers, what you do? You read the question also, you read the answer also. After reading it how many other times you want, then you close the textbook and then you start writing the answer on your own, because you've just read it. Will you be able to write good answers? Will you be able to write good answers? Yes. And third step, what to do? Just read the question and start writing. And then after that, you check it with your textbook regarding what you should have written and what is the actual answer that you have written over there. Okay. Anyways, because we have seen those one question over there regarding company audit, can we also see the other question over there, which is the other question over there regarding the rotation of the company auditor, right? So what is the question over there? S Private Limited has paid up share capital of 49 crore and borrowings from banks of 99 crore. The audit firm P and Company was appointed as statutory auditor of the company for one term of 5 consecutive years, where the provisions of rotation of auditor are applicable to the company. Comment. Right, so whether provision rotations are applicable to the company, where you got listed company as private limited. No, first I am asking you, tell me whether rotation provisions are applicable to S Private Limited. Rotation provisions are applicable. Yes, what do you others think? Rotation provisions, are they applicable to S Private Limited? No? You know what is section 139? Subsection 2. Right, so see, one, we studied right now the applicability of section 177. What is applicability of 177? Listed companies and every public company having the paid up share capital of more than or equal to 10 crore, or having the turnover of more than or equal to 100 crore, or having in the aggregate the LBDD, loans, borrowing, debenture, deposits of more than or equal to 50 crore are required to constitute an audit committee of the board of directors. Now we are talking about section 139 subsection 2. What is that? That is regarding the rotation of the company auditor. Are you all with me? Rotation of the company auditor. This was the applicability regarding the audit committee. Okay, right. So 139 subsection 2, which companies are required to rotate their auditor? Again, listed companies always. Apart from listed companies, the unlisted public companies having paid up share capital of more than or equal to 10 crore. Unlisted public companies having paid up share capital of more than or equal to 10 crore, or all the private companies having paid up share capital of more than or equal to 50 crore, or all companies having the borrowings or deposits of more than or equal to 50 crore. Right? 10, 50 and 50. Right? So listed companies always applicable. Unlisted public companies having paid up share capital of more than or equal to 10 crore. All private companies having paid up share capital of more than or equal to 50 crore. All companies, private, public, all put together, having borrowings or deposits of more than or equal to 50 crore cannot appoint an individual for more than one term of 5 consecutive years, and cannot appoint a firm for more than 2 terms of 5 consecutive years. After they finish their 1 term or 2 term, after that there is a cooling period of 5 years, right? Common partner, even that firm has to follow the cooling period of the 5 years. And a common partner, so say PwC did the audit, and now that partner of PwC, if he is a partner in any other CA firm, that other CA firm also cannot do the audit for 5 years. Are you getting that? Right? So rotation of the company auditor. So here what does it say? Right, as private limited, so having paid up share capital of 49 crore, so it is less than 50 crore, but borrowings from banks of 99 crore, so that is more than 50 crore. So rotation provisions are applicable to S Private Limited. Audit firm P and Company was appointed as auditor for one term of 5 consecutive years, right? So that means they've appointed an individual only for one term, which is correct. Why? Because rotation provisions are applicable to S Private Limited. Are you understanding that? Right, the rotation of the company auditor. Right, then anyways, because I'm preparing a list of applicability over here, right, which other applicability of company law should we mention over here? Section 138. What is 138? It is regarding the internal audit. Okay, which companies are required to appoint the internal auditor? Which companies are required to appoint internal auditor? Again, listed companies always. Apart from listed companies, the unlisted public companies. Right, the unlisted public companies. And third one over there you have is the private companies. So which unlisted public companies? It says having the deposits of more than or equal to 25 crore at any point of time during the preceding financial year, or having the paid up share capital of more than or equal to 50 crore as at the end of the preceding financial year, or having the total borrowings from banks, financial institutions of more than 100 crore at any point of time during the preceding financial year, or having the turnover of more than or equal to 200 crore at any point during the preceding financial year. Right. And for a private limited company, what is the condition? Borrowings or turnover. Borrowings of more than 100 crore or the turnover of more than or equal to 200 crore. Right. Borrowings of more than 100 crore or the turnover of more than or equal to 200 crore. So how do we remember the applicability? We have 25 doubling PBT. What do you mean by 25 doubling PBT? 25 and then doubling, and doubling D P B T. So D P B T. D stands for deposits, P for paid up share capital, B for borrowings, and T for turnover. Deposits 25, 25 double 50, 50 double 100, 100 double 200, right? But you have to start with 25. If you start with 50, problem, you will reach up to 400. 50, 100, 200, 400, anywhere you can reach. That is why what you have to remember, 25 doubling PBT. And a 25 doubling PBT. So 25 deposits, paid up share capital 50, borrowing 100, and then turnover 200. Right? Any one of them exceeded, and a unlisted public company needs to appoint an internal auditor. What does it mean? Any one of them. So say A Private Limited. Are you all with me? A Private Limited, let's be careful, has paid up share capital of 60 crore, has borrowings from banks, financial institutions of 90 crore, and has a turnover of 190 crore. Does A Private Limited need to appoint internal auditor? Be careful, huh? Repeat, no, I've written. A Private Limited, paid up share capital 60 crore, borrowings 90 crore, turnover 190 crore. Does A Private Limited need to appoint an internal auditor? Do they need to appoint internal auditor for a private limited condition company? What are the conditions you need to check? Only borrowings or turnover. So why on your own, just because paid up share capital is more than 50 crore? For private limited company, we only need to check for borrowings and turnover. Borrowing is less than 100 crore, turnover is less than 200 crore. A Private Limited, do they need to appoint an internal auditor? No, they don't need to appoint an internal auditor. Why? Because you only check for borrowings or turnover. You get carried away. Paid up share capital 50, 60 crore, oh, exceeding 50 crore. But you don't check that only for a private limited company. Right. Yes. Then once they need to appoint an internal auditor, who can be appointed as an internal auditor? Who can be appointed as an internal auditor? Right? What are the qualifications for internal auditor? Chartered accountant or a cost accountant, whether engaged in practice or not. So maybe practicing CA, maybe practicing CMA, or maybe non-practicing. Or what does it say? Any other professional, as may be decided by the board of directors, and he may or he may not be an employee of the company. Right? Internal auditor, he may or he may not be an employee of the company. Right? So chartered accountant or a cost accountant, whether engaged in practice or not, or any other professional as may be decided by the board, and he may or he may not be an employee of the company. Right? Section 138. Who can be appointed as an internal auditor? Right? Chartered accountant or a cost accountant, whether engaged in practice or not, or any other professional as may be decided by the board, or he may or may not be an employee of the company. Okay, right. Anyways, we were talking about the threats to the independence of the auditor. Independence and the threats. And why did I discuss all of this with you? Because all the disqualifications of the company auditor are nothing but the threats to the independence of the auditor. So now, what does it say? Auditor, whenever you have to do an audit, you need to check whether there are any threats to the independence of the auditor. If threats have been identified, then they need to take steps to reduce or eliminate those threats. And take steps to reduce or eliminate those threats. That means what? Say if I have to do the audit of Geo and I hold one share of Geo. So now can I do the audit of Geo? No. Why? Is there a threat to my independence? Yes, because company law says you cannot hold a single share. So I am to be appointed as an auditor of Geo. But what is the problem? I hold one share of Geo. So what I can do? I can sell that share and then can I be appointed as an auditor? Yes. So what is that? Can I eliminate the threat? Yes. My brother is holding 1,20,000 face value share. So what will I tell? Brother, please 20,000 share you sell, 1 lakh you keep. Why? Because then I am qualified to be appointed as an auditor. So in that case, what you can? Reduce the threat. So either reduce or eliminate. And you say, no, I will not sell my share, sell my one share. Or my brother says, you want to do audit, why should I sell my share? May say like that. If you want to do audit, why do I sell my share? I'm getting good money in that particular share. So not ready to sell the share. Then what to do? Not to accept the engagement. And if you've already accepted, then do what? If you've not yet accepted, don't accept. And if you've already accepted, then what? Then you withdraw from the engagement. Right? Then you withdraw from the engagement. Right? So what are we talking about? The threats to the independence of the auditor. Right? So what does it say? As an auditor, you need to check whether there are any threats, whether auditor be and appear to be. What is be and appear to be? Be means independence of mind, and appear to be means independence of the appearance, and also integrity, objectivity and professional skepticism, and identify whether there are any threats. If there are threats, then take steps to eliminate or reduce those. And if you cannot, unable to put the safeguard, then what to do? Not to accept the work. Okay. And here they are also talking about the 5 types of threats to the independence of the auditor, right? So again, a very important area for the questions in the exam. Right? 5 types of threats to the independence of the auditor. Right? Independence. What are the 5 types of threats as per the code of ethics? Right? What are the 5 types of threats we have? FSSAI. What is FSSAI? One is the familiarity threat. Right? Familiarity threat. What do you mean by familiarity threat? Right? So he becomes too sympathetic for the client interest, right? Too sympathetic, having a long association with the client. So, rotation of company auditor came just because of the familiarity threat. Rotation of the company auditor, it came mainly because of the familiarity threat. Then after that, you have the self-interest threat. Self-interest, you are having a financial interest with the client, but you are doing a business with the client. You're considering potential employment with the client. So obviously, you may not be independent, right? So self-interest threat. Then you have the self-review threat. What is self-review? Section 144 services. And you are providing the 144 services to the client. Why they have banned it under company law? Because they say that's a self-review threat. If you are doing accounting and bookkeeping, should you do stat audit? No. If I'm doing accounting and bookkeeping of a company, should I do the stat audit of that company? No, because that will be self-review threat. Maker, checker, same. I only prepared the accounts and I only doing the audit of that account. I only wrote the paper. I am only checking my paper. I will give 120 out of 100. You'll say, who will miss the opportunity? Let me give 120 out of 100. So that's a self-review threat. Then you have the advocacy threat. Advocacy means you are being an advocate of your client type. You're saying, oh, this company is the best. Everybody should, purchase the shares of this company. You're handling litigations on behalf of the company. So again, you can't be independent. Promoting the shares of the company, you are handling litigations on behalf of the company, then that is the advocacy threat. And what is the last one over there? Intimidation threat, right? Intimidation. To intimidate someone means to threaten someone. So threatening threat. And it's like a threatening threat. You can't write an exam, threatening threat. But I'm telling you, it's a threatening threat. What client is telling you? See, you qualify opinion. See, next year if I don't remove you. Auditor says, no problem, remove me. But if I need to qualify report, I will qualify. I am going to qualify the report. They say, CA, I've seen nowadays you're doing too much checking. What I will do now, I will reduce your audit fee. Auditor says, doesn't matter. Whatever work I need to do, that I am going to do. Client is telling CA, I will file a litigation against you. I will file a case against you. Again, you say, no worries. I will still do the audit as required. Right? So what is that? These are the 5 types of threats to the independence of the auditor. What are the 5 types? Familiarity threat, self-interest threat, self-review threat, advocacy threat, and the intimidation threat. Okay. I see AI style of asking question. Which of the following is not a self-interest threat? In MCQ variety, which of the following is not a self-interest threat? Direct financial interest, loan or guarantee to or from a concerned client, undue dependence on the client fee, and then they will say when the auditor has recently been a director or a senior officer of the company. So which of the following is not a self-interest threat, right? We have the D option over there. Are you understanding that, right? Then they can again ask a question, which of the following is not a familiarity threat, right? And again put 2 points, 3 points from here and 1 point from somewhere else. Okay, right. Also they ask the questions in the correct, incorrect. Correct, incorrect, what they do, they do mismatch. What mismatch they do in the correct, incorrect? They take the name of one and they put the definition of another. They take the name of one and they patch the definition of another. Like what they will write, familiarity threat occurs which occurs when an auditing firm, its partner or associate, could benefit from a financial interest in an audit client. What they've written, familiarity threat. So what do you write down in the answer? Incorrect. And that is not familiarity threat, that is the self-interest threat. And other arm of your answer, what are you also going to write over there? Okay, familiarity threat when you are too sympathetic to the client interest. Right? They do the wrong combination, wrong pairing. They take the name of familiarity threat and they write the definition of the self-interest threat. Okay. For each of this type of threat, what you need to know, what is the meaning and what are the examples of that type of threat. For each of the type of threat, what we need to know, what is the meaning and what are the examples of that type of threat, right? So what is self-interest threat? Mainly when you're having the financial interest, right? How you are having financial interest? Direct financial interest, right? Or materially significant indirect financial interest, loan or guarantee to or from the concerned client, undue dependence on the client fee, total receipts of your CA form 10 crore, 8 crore coming from this one client. Whatever happens on earth, you will never allow to lose this client. Right, so undue dependence on the total fee. Close business relationship with an audit client. That is why we have 141.3E. What is 141.3E? Person of a firm is having any business relationship. You cannot do the audit. Potential employment with the client or contingent fees for the audit engagement. Could this come as a retail question in your exams? You understand? Wholesale, retail. What is retail? Write short notes on self-interest threats. Right, so you have to explain what's a self-interest threat and give the example. What is self-review threat? Which occur when during a review of any judgment or conclusion reached in a previous audit or a non-audit engagement. That is, non-audit service include the following. What does it include? All the 144. Management services, internal audit, investment advisory, design and implementation of information technology system. Right, so these are all the examples of your 144. And an auditor not to render certain services. Are you getting that? Right. Then advocacy threat when you're promoting, you are like, when election, how you support a particular political party. So here you are supporting your client, you're promoting your client or perceived to promote a client's opinion, right? To the extent that it feels that the objectivity of the CA is getting compromised. And when will that happen? When the CA is dealing with shares or securities of the audited company or is handling the litigations and the third party dispute. Right, so you're saying, no, my client has never been done any fraud. You're handling litigation, or you're saying the shares of this company are very good. So you're being so pressurizing or so much in favor of the client that it looks like your objectivity is getting compromised. Some auntie of yours or some cousin of yours, if they sell a particular product or they say, oh no, it is very good, you should always go over there only to buy the thing, you should always shop from there. You think, why she's telling so much? Does she get a commission or what? You understand? No, so you're also CA is telling so much about the company. Oh no, this company share you should buy, this company share you should buy. Oh, this company can never do anything wrong. When he's handling litigation, he's telling. So then you think that objectivity of the CA is getting compromised. Right? That is advocacy threat. Then familiarity threat, too sympathetic to the client's interest. Examiner's eyes, which words they want in your answer? these words, too sympathetic to the client interest. When close relative of the audit team is working in the senior position in the client company, that one of the article, his father is a managing director in the client company. Article is doing articleship in PwC. PwC is going for the audit of Geo. And now this article's father is the managing director of Geo. So close relative of the audit team is working in a senior position in the client company. Are you understanding the situation? Yes. Then former partner of the audit firm being a director or senior employment. So earlier he was a partner in your firm. Now he said, I don't want to do practice. And he joined employment in the client company. Right. Then long association between auditors and their counterparts. So that's why rotation of company auditor came. And acceptance of significant gifts or hospitality. Right. So that is why, generally when your client sends you some Diwali gift or some gift over there, you have to return it back to the client. Why? Because you have to say we are not allowed. And a maximum you can take a Diwali gift like, some gift hamper or some, what you say, diary or something. But if client is sending you like, some gold coins over there, or if they are sending you some particular, some, what do you say, foreign trip vouchers or so. They say right now they will send me gold coin. They will send me foreign trip voucher. And when time come for audit, they'll say, what CA, you forgot or what? I sent you gold coin. What CA, you forgot or what? I sent you for foreign trip. So then why, no? Why take favor from anybody? Then later on, you also have to be submissive. So it says acceptance of significant gifts or hospitality. Like you accept what do you say, a diary or something, that is okay. Right. And last one is intimidation threat. Intimidation, they are threatening you. And so deterred. Deterred means what? You're stopped from acting objectively. Right? The threat of replacement. They are telling you we will change the auditor. They are telling you that we will reduce the audit fee, or they are threatening you with the litigation. Right? So these are the 5 types of threats to the independence of the auditor. What are the 5 types? Familiarity threat, self-interest threat, self-review threat, the advocacy threat, and the intimidation threat. Right? Tomorrow we'll begin our day with bank audit. Right? Then after bank audit, we will go to the audit of the cooperative societies. Right? That's a brief discussion of cooperative society. Then we will do a majority of the part of the chapter of the majority or some part of the chapter of the items of financial statement. And then we will have some discussion regarding our basic concepts and some standards we will cover in that process. And some standards like audit risk, audit evidence, and those type of discussions we will have. But main we will focus on doing the bank audit and also the items of financial statement. So my advice to you would be that whatever we've studied today, look into that, and whatever we are going to study tomorrow, also read that and come for the class, right? So see you all tomorrow morning, right? Thank you. No, I'll take it one of the days. Why last? I'll take it before that one.